Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Yes, Santo is back. I know you guys were missing him, so therefore we pulled him out of his bed, even though he was feeling a little under the weather, and we have brought him out here on the chair. Santo, welcome back.
Thank you, CJ. You're being kind, I must say.
Well, that said, of course, yesterday we hit record highs, and sentiment at this point of time is as high as it can be. And of course, one of the factors for that is of course also global crude oil prices. Now, global crude oil prices, when we were sitting at 52-week lows, 4-5 months ago, they were above $110 per barrel. But at this point of time, global crude oil prices have sank around the $80 per barrel mark. And the feeling or the hope or optimism within the market, at least for an importing nation like ours, is that it may now head towards $65 to $70 per barrel probably in in a few months' time. But can it really go that low? That is the argument that we are putting in the spotlight this morning. My belief is that if you look at what OPEC has been doing, OPEC has been trying to make provide a balancing act to supply and demand. The recent decline that we have seen in crude oil prices from about roughly $110 per barrel back in July to about $80 per barrel now has largely been triggered by the fact that, of course, the probability of a recession in the US is now almost near certain next year. Along with that, there was a hope that probably China will come out of its lockdown next year, and that could probably offset some of the demands lost or barrels lost in Europe and in US. But clearly, with the recent protests in China that we talked about yesterday on our show very much in detail, there is now a fear that Chinese demand may not even come back to the levels that they used to exist prior to the pandemic. Now, in that case, of course, supply would outstrip demand if we go by current levels. The hope within the market, Santo, I think is, and this is why the next 1 week will become very almost a make or break sort of situation for the global crude oil market. There are two events that are going to happen. One is the OPEC meet, and then on 5th of December there is a meeting in the Eurozone to decide the price cap on Russian crude oil. Now, how those two meetings unfold, I think could decide how crude oil prices could end up going ahead in the next year. OPEC, the view right now is that OPEC will go ahead and probably cut production even more to ensure that crude oil prices do not fall below $90 per barrel at this point of time. And that is also a view coming out from the house of JP Morgan as well. They believe that average crude oil prices could in 2023 could stay above $90 per barrel. And in fact, more surprisingly so, they expect crude oil prices to average $98 per barrel in 2024. So if you were expecting that crude oil prices will go back to the heydays of about $45 to $60 per barrel, I don't think that is happening anytime soon, Santo.
Well, CJ, there were other predictions as well for crude oil prices this year, that towards the end of the year it would be closer towards 100. But those have also not come true. Now, at this point, clearly the falling crude prices seem to indicate the deeper problems of the global economy. There's no doubt about that. You touched upon the fears of recession. Clearly, that's one of the factors causing crude oil prices to dip. The other thing, again, which as you mentioned, the meeting to decide the cap on Russian crude oil prices, that is going to play a decisive role. Now, if let us say the price cap is set between around $65 to $70 per barrel, which is closer to the market price, then it may not have much of an impact. But in case the price cap is set lower than that, now the idea here is actually to ensure that Russia doesn't make too much money by selling oil. But if they put a lower cap and Russia cuts back on production, then that possibly could lead to a flare-up in crude oil prices. That is clearly the thing that seems to be worrying market.
It's a cap that is not a cap, basically.
Yeah, and lastly about OPEC mentioning about deeper production cuts. Now, there's always been this chatter that the OPEC has found it very hard to enforce discipline. There's no way of actually checking whether every member is adhering to the production quota that has been set. So those things will always be there. But at this point, it's more to do with weaker outlook on the global economy that is driving prices lower. And I think, CJ, probably it could fall even further from these levels.
Well, I mean, of course, at this point of time, a lot of expectation. I mean, at least the voices out of US clearly indicate that they are expecting crude oil to fall around $70 per barrel. Also, that is where the US government has indicated now that they will start buying back a lot of the strategic reserves that they had, pumped into the market. Remember, also one of the reason why crude oil prices have remained so soft the past 6 months is thanks to the US, because US has released millions and millions and millions of barrels out of his own strategic reserves into the global oil market to bring down crude oil prices in general because of his fight for, against inflation that we are seeing in the US at this point of time. So very interesting times in the crude oil market, especially the next 1 week could really end up determining what could be the outlook, because let's not forget that the budget is also upon us here in India. Last time around during the budget, I think Santo, the FM had expected crude oil prices somewhere around $75 to $80 per barrel in her budget speech. Then we had the Russia-Ukraine war and crude oil prices spurred almost $125 per barrel. So this time it will be interesting to see what sort of estimate that the government will also take for its own budget making exercise, and that could also have an impact as far as subsidies are concerned, because let's not forget that if crude oil prices do fall, then that means government has to provide lower subsidies to or lower compensation to OMCs. Then that frees up more capital for capex and infrastructure projects. So there are, of course, a lot of implications to how the behavior of crude oil market could end up affecting our own economy going ahead, and it will be very interesting to see how this unfolds in the next week. Moving on, let's take a check on the trade setup for today. And before the bell, it seems like it is a bearish day at this point of time. Maybe a little bit of a caution creeping into the market, probably after the sort of sell-off that we saw on Wall Street yesterday. But clearly, SJ's Nifty futures are indicating almost a 80 to 90 point cut on the Nifty this morning. So that is not a really good start after the euphoria of hitting record highs yesterday. Wall Street, of course, saw a sharp sell-off yesterday on concerns around what is happening in China and the Chinese economy and how it could affect the overall outlook for the global economy. Also, US dollar, that was also bullish. It ended above the high of the day from the previous session, that was on Friday. So clearly that could also have some impact on emerging market equities, and therefore I think today's sentiment indicator clearly is a bearish one.
Well, yeah, CJ, it looks like indices could steadily crawl higher. There's still good money flow which is coming into the market, and that itself could push indices higher. But clearly at this point of time, the market appears to be lacking strong triggers on either sides, and you've been seeing the underperformance of second line shares, which again it looks like will continue for some more time, given that the earnings performance there during the second quarter, while it was just about okay, again analysts don't see any reason why earnings can get better in the current quarter. So there's some bit of caution there also. So that said, you could see the market move in a range for some more time to come. Quick look at the FNOQs. We're seeing long build up in futures of Apollo Tyres, Delta Corporation and India Bulls Housing Finance. We're seeing short build up in futures of Havels and IEX, and there's been some short covering in Birla Soft, Atul, Hero MotoCorp and Mahindra Financial Services.
Well, thank you for those FNOQs, Santo. Moving on to the newsmakers of the day, and the first one on my radar today is from the chemical space, and this is Amy Organics. Now, the stock is likely to be buzzing in trade today after bulk deal data showed that Norges Bank, which is a sovereign wealth fund of Norway, they have bought a substantial stake in the company through a bulk deal. Clearly, this purchase should boost the confidence or the long-term growth in Amy Organics. Remember, the stock had been doing quite well, but then petered off a little bit. There was a lot of profit booking over the past couple of months, but with this sort of a name or marquee investor entering the stock, clearly is a very good indicator for in terms of from perspective of long-term health of this company. So I think this stock should be seeing some bit of gains in the market when we open at 9:15.
Well, Lupin is a stock on my radar. Now, the company's Brazilian unit has acquired rights to 9 brands from Bosch Health. But CJ, it remains difficult. It looks tough whether this move in itself will improve sentiment for the stock, given that the company has been grappling with US FDA observation that two of its plants, one is the API manufacturing facility at Manideep, and the second one is its injectables division at
And injectables is very important because that is lucrative. Yeah.
Yes, and there have been some procedural issues there very clearly, which Moneycontrol had also reported.
Well, moving on, top brokerage bets of the day, Santo, and this time I want to start it off, if you don't mind.
Please go ahead. When I saw the stock itself,
exactly,
I realized
because
that.
I'm a little, rubbing my hands over this because I've been talking about the stock, of course, a lot in the past few trading session. Of course, not only me, the entire market has been talking about it. And this is Paytm. Of course, CLSA yesterday came out, last night, basically overnight, came out with a report on the stock, and a very surprising report because they have actually upgraded their sell rating on the stock to buy now. They are no longer a sellers, or they are no longer recommending investors to sell the stock. They're actually recommending them to buy it. And the reason is that they, at this point of time, from the current levels on the stock, they are seeing a very substantial upside with a target price of about 650. They believe that valuations have finally become compelling. Yes, you have heard that right. Valuations on Paytm have finally become compelling, Santo. Largely because of the recent correction that the stock has seen. It has now breached about, it at one point of time breached about 450 level as well. And also another point that CLSA noted, Santo, and I really found that very interesting. They said that now, if you look at CLSA's current valuation, about $3.5 billion, right? Out of that, $1 billion is cash. That is not a bad ratio to have in terms of, your cash to market capitalization. Basically, almost 33% of your market capitalization is made up of the cash on your books, basically, which for Paytm is about $1 billion at this point of time. So clearly that is also giving CLSA a lot of comfort. They said that the current valuation at this point of time are actually back to the level where they were in 2016. This was before demonetization, Santo. So clearly we know how the payment industry, how the entire landscape for Paytm has changed in the past 6 years, especially after demonetization. So clearly at this point of time, I think it would take a brave heart to actually be ultra bearish on Paytm going ahead. And I think there is a reasonable case now, especially with Citi also the other day coming out with a very bullish note on the stock, that there could be a near-term rally on the offer as far as Paytm is concerned.
Well, CJ, I think we could probably again see a Zomato kind of situation in the case of Paytm also, where the stock price had plummeted after the pre-IPO investors had sold their stock. There was a quick bounce back, but again now the stock has been stuck in that same price for a while. In the case of Paytm too, it looks like the pessimism may have been overdone. A lot of technical factors at play currently, and which is why the stock price has fallen really sharply. But again, I hold my earlier stance that a sustained upside still looks difficult. Well, that said, Apollo Tyres is my brokerage pick of this morning. Morgan Stanley has rated it as an overweight with a price target of 348 rupees. Now, according to Morgan Stanley, the outlook on tire volumes has been improving. Morgan Stanley is bullish on the tire industry as a whole. Besides that, margin pressures have been easing and the return ratios too have been improving. According to Morgan Stanley, improvement in the Indian and EU markets could drive re-rating for Apollo Tyres.
Now, Santo, that said, talking of stocks, of course, we have to also touch upon the stock that we feel probably will be buzzing in trade today, and starting off with a name from the life insurance space.
Yes, SBI Life is my first stock of the day. Now, CJ, clearly the stock has been an underperformer, just like most of the other insurance stocks, because the insurance sector in general has been out of favor with investors for much of the last couple of years. Now, in the case of SBI Life, it's got a decent market share. It's 7% overall and close to about 15%, close to about 23% in among private sector insurers. Besides that, the biggest advantage of SBI, well, we'll get to that in a minute. Quick check on the markets. The Nifty has opened flattish. It's down 6 points.
Yeah.
Although
that's
we are seeing good.
A decent start actually compared to what the SGX Nifty actually was indicating.
Well, it's now moved into the positive. Market breadth is it's quite positive at this point in time. NSE advances close to about 1,400 stocks, and less than 450 stocks are down at this point. And Nifty Bank is up by 0.14%, and Nifty Midcap also slightly higher in early trade.
Clearly, Santo, nothing phases our market at this point of time. I mean, if you look at the broader market, that is where most of the gains are coming in. Nifty Midcap and Nifty Small Cap Index, again, making a very, very solid start. Capitalizing, of course, on the gains that they saw yesterday as well. Yesterday also Nifty mid cap and small cap indices were actually better performers than the Nifty. Surprisingly, I think if you can pick up the India VIX chart, I think the VIX is again has started off on a positive note. Actually it's fallen 3%. Actually, I think the first tick was higher by about 1.7%, but clearly it has fallen. So clearly that shows there's a high level of comfort right now in the market as far as concerns are concerned. Generally when you hit an all-time high, there are some people out there who will start thinking that maybe a correction is around the corner. But at this point of time, you can see through the VIX that the confidence of the market at this point of time is also at an all-time high.
Well, moving back to SBI Life now, CJ, the biggest strong point in favor of SBI Life is its distribution channel. Now, SBI bank branches, about 25,000 of all of them across the country, they sell only SBI Life insurance.
Absolutely.
So while you have other life insurers like HDFC Life and ICICI Pru also having banks to support them, this kind of an exclusive deal which SBI has is very unique. And that is also reflected in the lower cost structures when you have a distribution structure as strong as that. Now, SBI Life has a cost operating ratio of about 10%, which is when you compare it with other players like SBI, ICICI Prudential and HDFC Life, it is about 15%.
Right.
Also, if you look at the value of new business premium for SBI, it has been showing a steady improvement there. It's now close to about 31%. Besides that, persistency levels are also quite high for SBI Life, and it's also increasing the share of protection products in its overall portfolio. So when you put together all these things, also the new business premium for this year, it's managed to improve its market share to about 15%. So when you put all these together, clearly SBI Life is one of the stocks that does not seem to have got its due.
Well, Santo, clearly, because the stock is still underperforming despite all those rosy outlook and the strong quarterly performance that we have been seeing from SBI Life. The stock really has not gone anywhere the entire year, and that I think for me, I think is a telling story. Really, I don't think at this point of time investors in the market are chasing insurance names. When you can chase banks, why do you need to chase a non-deposit taking, non-lending financial services company? Yes, of course, the longer term story for insurance companies will always remain the under-penetration story, but I think also recently there have been a lot of regulatory action as well in the industry, which probably has made us few of the investors a little cautious as to they want to probably wait it out, see that all of the regulatory actions are out there in the market, and only then take a firm view on where the sector is headed. That said, I think they're also a little averse to probably ascribing premium valuations to insurance companies at this juncture. At this juncture, I think except for a few turnaround stories like a Max Life out there in the market, clearly none of the life insurers at least at this point of time are performing that well, despite what seems to be very stable and sturdy earnings performance from their end. Moving on, the stock on my radar today would be IRB Infra, and this is largely a technical pick because recently the stock has actually given a breakout on its daily line chart, which has happened after a couple of months now on the stock. I think November has been a month of accumulation for the stock, and if you look at the chart pattern as well, it has been making higher highs and higher bottoms on a daily chart pattern. That is the observation coming from HDFC Securities. They said that if you look at the entire on days on which IRB Infra has been declining, those days actually have seen good amount of volume growth, and on days when it's been rising, the volumes have surged. So basically, it has been a month of accumulation. Clearly, a lot of savvy investors have been accumulating the stock at every dip, and that is why HDFC Securities believes that there could be an upside of as much as 13% on the stock going ahead in the coming weeks, in the coming 2 to 3 weeks going ahead.
Well, IRB Infra does look very strong on the chart, CJ, though not very, I'm not very sure as far as the fundamental side of the story goes. Just an average set of numbers for the second quarter, you've seen the numbers being sharply lower than what you saw for the June quarter, and also for the, in fact, for the March quarter.
But that had also to do with the seasonal factor, given that construction, road construction generally tend to pause a little bit during the monsoon season. So probably that affected the sequential performance from June quarter. But I think as far as the NHI tendering is concerned, I think the pace of tendering is expected to pick up in the third and fourth quarter, largely, of course, because generally government capex or government infrastructure spending picks up in the last 4 or 5 months of their fiscal year. So I'm hoping that probably going ahead, order inflows for IRB Infra should also be quite healthy in the coming months.
Well, it needs to show some really strong numbers, CJ, if it has to get past that 300 mark, which it had touched sometime in February this year. Well, that said, CJ, my next stock is NMDC. Stock had taken a bit of a punishment. Now, few things going in favor of the company. One is that the demerger of its steel division, which allows the company now to focus purely on the mining side of the operations. Now, recently NMDC cut the prices of its iron ore fines as well as lumps. Now, that one of the reasons is that offtake has been pretty flattish. Because of that, the company is now trying to make up for it by cutting prices. But the good part is that at these prices, they are at a steep discount to import parity prices. So that clearly is something to be said in favor of NMDC. And more than that, CJ, I think the dividend yield, given the handsome dividend that the company has been paying out, right, that definitely makes the stock a good attractive play. Also, when you consider the fact that most of its capex in the mining operation has been done with that, the capex is minimal, and because of which, according to Moneycontrol Pro, you will actually see an improvement in cash flows in the coming quarters. So you have good dividend and you have strong cash flows. Both put together, I think, make the stock definitely worth a look.
Well, worth a look it is definitely, Santo, especially after the export duty on iron ore being taken away by the government. But if you look at it from a technical point of view, yes, there has been a very strong rally in NMDC the past 1 month, largely in anticipation of the the revision of the export duty on iron ore. But I think now, after a 15% jump in a month, there is a likely a case that a lot of people who had been maybe lost money in the previous drawdown on the stock will probably take that opportunity to get out of or cut their position on the stocks, and I think that is why you could see some bit of consolidation creeping into the stock. If you look at some of the momentum indicators also, they are also exhibiting a lot of weakness in the stock. The RSI is somewhere around the 50 range, money flow index below 40 at this point of time. So clearly, the technical factors or momentum indicators are not in favor of NMDC, and also the stock is trading quite firmly below its 50-day moving, 50-day as well as the 200-day moving average, which is generally a bearish sign. So until it breaks above those levels, I think it will be hard to argue, Santo, that this rally that we have seen in the past 1 month could sustain going ahead.
Well, CJ, the last stock on my watch list is Gabriel India. Stock has seen a good run up over the last couple of weeks, and for good reasons also. The second quarter numbers were pretty decent, and with the easing of chip shortage, production has started picking up at all the automobile companies. And when you look at Gabriel's market share, it's pretty robust across the two-wheeler and three-wheeler segment, besides the passenger vehicle as well as the commercial vehicle segments as well. Besides that, company has been able to retain its market share, most importantly in the replacement market as well. Replacement market is close to about 14% of its overall revenues, and there it has a 40% market share. Besides that, CJ, the company also reported good numbers in terms of its export revenues. That has seen about an 18% growth there. So again, one of the underrated stories. It's only of late that the stock is now beginning to get noticed.
I don't think Santo is underrated, given the fact if you look at the performance of the stock, it has been really spectacular in the past couple of months.
Just one thing there though.
Yeah.
It's still to get past the highs it had made in 2018. So in that sense, over a longer time frame, still there will be a lot of investors who are
absolutely. And I would be worried because also when you edge closer to that level, I think you will start seeing a lot of investors who had been waiting for that opportunity to cut their losses, starting to supply those papers, and that could always affect the rally on Gabriel India. But the only concern from a fundamental side, of course, would be if OEMs start asking for steep discounts, because generally what happens is that as competitive intensity increases in the auto component space, OEMs or original equipment manufacturers, they tend to ask for a higher level of discount when they are buying in bulk, and that could, of course, those sort of pricing pressure can, of course, affect the margins of Gabriel India. Also, on a technical point of view, given, yes, as Santo mentioned, the spectacular rally that the stock has seen, a lot of the technical indicators are also now indicating overbought conditions. So I will not be surprised that in the near term, you could see some bit of profit booking creeping into Gabriel India, Santo.
Well, and do we have any queries this morning?
Yes, I think we have a couple of, and I think a lot of our viewers want our thoughts on Apollo Tyres, Santo. I think this is one stock that you have spoken about elaborately in the past as well. So yeah, I mean, that is the argument. Basically, there's been a lot of long build-up on Apollo Tyres. It's up more than 10% in the past 1 week alone. So what is the outlook going ahead for Apollo Tyres in your point of view?
Well, I think just going by what most brokerages have said, one key thing to watch for will be how the European side of its business does. So far, the indications are positive. Now, if it's able to sustain that, probably you could see the stock price climbing further from these levels. But at this point, it's still almost 50-50 because the stock has also had a fairly good run up till now. So I think that is what makes me a little cautious, I would say, CJ.
I think, Santo, I think in the case of Apollo Tyres, of course, another factor from a business side point of view is also the fact that crude oil prices have come off quite sharply on a sequential basis, and that will definitely aid the margins. I mean, I think UBS India, which came out with a note on the stock yesterday, I think, they also made the same argument that with the decline in crude oil price and crude oil derivatives, I think that will definitely spike up margins for Apollo Tyres in subsequent quarters, and you could see that impact coming out in the December and the March quarter for the company, and that is one of the reasons why UBS India also gave a buy rating on the stock. So clearly, at this point of time, the momentum is in favor of Apollo Tyres. The fundamentals are in favor of Apollo Tyres. What remains to be seen is whether this performance sustains in the months and quarters ahead.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching and also writing in. Do send in your queries. We'll try to address them to the best of our knowledge and time.
Absolutely. And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's trading action. Till then, have a great day.